Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update with our friend and colleague Erik Wetterling, also known as the Hedgeless Horseman. And you can check out the link to the Hedgeless Horseman down below and follow along with the companies on Erik's radar. And Erik, it's always great to have you on the show. And we were just having a spirited conversation off mic about the markets. And there isn't a ton of news to dig into on some of the companies on your radar. So we're going to just talk more generally about the differences in sentiment and momentum and the action on the charts that we've seen in gold and gold equities versus silver and silver equities versus copper and copper equities. And they're all a little different, even though people lump them all together as metals and resource stocks. There are some different prevailing winds under the surface. If we start off with gold versus silver and look at the two precious metals, it seems to me like the gold producers have had a very good run. It's mostly digested the move in gold to the upside, but some would argue that there's still a lot of producers that are still lagging. When you look at the ETFs like GDX and GDXJ, they've had a good move up with gold, but they really didn't eclipse prior peaks like people expected they would. But when you look at the gold juniors, when you look at the developers, when you look at the explorers, when you look at the prospect generators, they really didn't move like the producers. So a lot of people are looking at their portfolio of juniors in gold and saying, hey, this thing's just getting started. And there's a lot of catch up to do. And if you contrast that with silver, the silver producers did rocket higher with the higher silver prices. SIL did well, but when you look at SILJ, it really didn't. And when you look at the juniors, some of them individually did price in the moves in silver and the higher move. Maybe not to the same level people expected, but they definitely responded. And they've actually become more fully valued, some of them, the juniors, than the gold stocks. So when you just look at silver and gold and the universe of the stocks around those, how are you looking at the discrepancy between the two sets of resource stocks?
Yeah, I mean, I think it just goes to show that we've been taught early on that, the market is an efficient pricing machine, yada, yada. But then we see here, it's like there's every sector has a bunch of subsectors, and every subsector has its own sentiment. And sometimes one subsector follows, let's say, the metals higher, sometimes it doesn't care, sometimes it goes down more when it goes down, then it goes up when it goes up, yada, yada, yada. So I think it's perfect example of how hard it is to really predict anything because even it's hard enough to get the metals direction correct. And then you don't really know what any subsector, how that's going to react to whatever the metals do. So it's very hard to guess price action correctly. And that's why I typically don't even try. And as we've seen, it's like 2 weeks ago we talked about some silver juniors, for example. Sentiment got really, really hot for a while because there was a recent uptrend. So they went higher, and silver price, to be fair, went higher, but at the same time, like we discussed, that yes, silver was at I think $38 or something at the time, and it's $3 higher than the peak at $35 a few months before that. But it's like some silver juniors were maybe 100% higher or something than that peak, and it's like it shouldn't be that much of a difference. It's not like the intrinsic value of the most silver juniors went up 100%, let's say, by a $3 move in silver, because most of them are not even close to production. And as we've seen, I mean, now, for example, silver prices has kind of given that back already. So it's like how valuable was that? It was higher, $3 higher for, let's say, a week or something before going down. That has no effect really on the intrinsic value of any of these silver juniors. But the point I made was that, okay, so they've gone higher and momentum formed, and everybody thinks everything is cheaper when it's going higher. I mean, you don't hear many people say that the juniors were cheap last year at the bottom, but when they're starting to move, then all of a sudden you're going to hear about it, how cheap they are. So it looked like, okay, they're going up on increasing sentiment and momentum, which increases sentiment even further. So it's like, live by the sword, die by the sword. Because we've seen recently with the crash in copper, silver also took a beating, and all of a sudden these juniors that were just flying, these silver juniors that were just flying, they're all of a sudden down 30-40% from the recent peak. And again, it's like value for sure did not change that way. That's like in 2 weeks it went up 100%, then a week later it went down 40%. That's, I mean, value doesn't change that much, not across the board in bunch of different juniors. So I just think it goes to show that in particular silver, again, it's very emotionally charged. There's a lot of people who are waiting for much higher silver prices, and everybody kind of knows or have heard that when silver juniors move, they typically can move a lot. And again, that's not necessarily just because silver price moves that much, but it becomes a self-fulfilling prophecy that everybody's heard this, so everybody's ready to. If you want to make the big money, if you want to make the quick money, you got to be in silver juniors. So I think it's just being reflected in the moves in a lot of silver juniors. That the marginal investor in the silver junior space is different than this gold junior space, and especially, for example, the copper junior space.
Well, and let's dig into this a little bit further. I hear what you're saying too, because I think a lot of people on an up move start doing valuations and look at the metals price moving up and they look at economic studies or they look at production profiles and they assess that, hey, these things are still cheap. I don't think that they're cheap. I would say that they're still undervalued compared to where they were in other cycles. And I think there's a distinction between cheap and undervalued. Cheap is what we saw when nobody cared about the sector. So I would say in 2022, at the end of the year, when gold was doing that false breakdown below 1675, it was in the 1618s, and silver was down at 1740. The stocks were decimated in September of 2022. That was cheap. Now I would say that based on the metals prices move, the price of the silver stocks caught up a lot more than, let's say, the gold juniors did with the metals price action, but they were still undervalued relative to the metals price. Just a quick sidebar, SILJ, we were pulling it up before the call, and back in 2016 on that rally, SILJ got up to almost $20. It was 1978. Then the silver squeeze of 2021, it got up to 1884. This recent rally, SILJ at $39 silver only got up to 16 bucks, 16.11. So it's making a pattern of lower highs each time, even though silver has gone a lot higher. So you could argue they're more undervalued. But when you look at the gold juniors, a lot of them really didn't start moving till the last year or so. And gold had gone up from, again, 16, 18, 16, 14 in that area in 2022, all the way up to above 3,000, 3,400 at one point. And it seems like they just now got the memo. So when you look at junior stocks, do you feel they had the same momentum that the silver stocks have had?
Uh, Good question. I mean, you follow that stuff better than me or more than me, and especially I think you follow a lot more companies. It's hard also, of course, because I mean, with the volatility and silver is more volatile. So if you just look at an economic study and use the spot price, I mean, silver typically bounces around a lot more than gold in the short term. And I'm not sitting, updating every spreadsheet or economic study every week or anything like that. I just think that gold juniors they lagged so badly with the higher gold price that it felt like, yeah, I mean, it's basically felt like they've lagged so much. I've never seen anything that cheap relative to where gold is. And we talked about this a bunch of times where, the gold price was outrunning every presentation basically, and all the economic studies, and their base cases were like, $1,000 lower than price of gold was. So I've always felt like, okay, it's obviously not high sentiment in gold juniors, whereas silver juniors, it feels like typically that when silver moves up, silver juniors tend to react because everybody's kind of waiting for that more than, or let's put it like this, and we discussed this off mic. I think a lot of people obviously have had tough years in the junior sector since at least 2021 to 2024. And when that happens, I mean, like in poker, if you're having a bad session, you tend to go on tilt. So you want to make the money back that you lost quicker, and that means usually you go for higher risk. So I can see that also the longer and the worse the sector has been, it kind of gets people like, okay, now I really can't miss the silver move, let's say. I really can't miss the silver junior move because everybody knows. So it's kind of a self-fulfilling prophecy, I guess, that silver tends to lag gold. When it gets going, the silver juniors tend to move even more than gold juniors, for example. So I think everybody's kind of preparing, let's say, for silver to go up. And you can see this like the sentiment recently was hotter, I would say, in silver than it was in gold for the juniors, even though gold is obviously much higher than the 2011 high, whereas like silver is not even at the 2011 high. So it's like that's my guess at least that explains some of the, in my opinion, more sensitivity to the silver prices. But at the same time, yes, silver tends to be very crowded in the short term because it is more volatile, and that's also why it's kind of it goes down as well, the silver juniors more than the gold juniors, because there is a lot more hot money. And that's, I guess, the hard part about riding, let's say, silver juniors, because there's typically going to be a lot of hot money, which means the moves to the upside can happen so fast without any real change in value. But then the flip side of that is that the corrections can happen so fast and they're absolutely brutal. I mean, if you're up 200% one day and then you give 40% back, that's going to feel like shit, especially if you had pretty poor years, let's say, behind you. But that's the irony, I guess, that even the best performing sector at the end of the day, if you go from bottom to top, might be silver juniors, but at the same time, it's probably much harder than most sectors to ride because you're going to get kicked in the teeth a lot simply because, yeah, I guess, again, live by the sword, die by the sword. They can go up the quickest, but they also tend to fall the hardest in between. I don't know exactly what, if I answered your question, but I'm just as a spectator, it's like you got to have, I was going to say nerves of steel to rise some of these silver juniors, for example. And even if you zoom back years from now, it's like, oh, these silver juniors went up 1,000%. The amount of corrections within that bull trend is probably going to be, yeah, I don't think people who've never been in it, they have no idea how rough these bull markets can be in juniors.
Oh, you're telling me. I mean, I got 20 silver stocks in my portfolio. Now, granted, they're all in the green right now, but they also pulled back so extreme over the last week or two that I saw a big portfolio move as a result of the volatility. And I guess that points out that we're actually seeing, I would describe it as torque. We're seeing upside and downside torque in silver stocks because they are leveraging the move in the metal to the point you made when silver went up a couple bucks. Some of the stocks, especially the juniors, went up 100%, 200%. Well, if you see those kind of moves on a small percentage move in the metal, on a 10% move in the metal, and you're seeing a 100% response, sometimes we're seeing not just a 3x, but sometimes like a 10x torque to the metals price movement to the upside and to the downside. So it's definitely not for the faint of heart. When you look at gold, just one more question on gold. The producers have been moving for years. They have been moving since the end of 2022 to the upside as a group. When you look at the ETFs, when you look at most of the big producers, whether you're looking at Agnico or you're looking at IM Gold or you're looking at Kinross, these things have been moving for years, but the juniors really haven't. And while they did outperform gold slightly this year in the first quarter, like you saw the juniors and you saw the gold stocks outperform gold itself, in general, over the last, I'd say, 2 or 3 years, as gold has gone higher and higher and higher, from 1,600 to 2,000 to 2,400 to 3,000 to 3,400, you did not see gold stocks, the juniors, do that 3-to-1 ratio of leverage or torque to gold. Why do you think that is? Why do you think that the juniors just woke up? And why do you think that we're not seeing that outsized leverage? Because the whole reason you take the risk on the junior stocks is you want leverage to the metals price. Why aren't we seeing that in the gold stocks?
Right. Yeah, yeah. I mean, that's a very interesting question. And of course, like I haven't really been in, I've never really played around in major miners or mid tiers. So I haven't really gotten the benefit of those gold miners, larger gold miners, actually following the gold price. I've always been, obsessed about value. I mean, even if I think that, oh, Newmont might be 50% undervalued, and I guess that doesn't really happen that often. But if it were, it's like if that happens, which was maybe the case a year ago at least, I thought, there were gold juniors that were, even though they aren't necessarily that tied to the price of gold and they shouldn't be, I simply think they were a lot cheaper. So I think that's typical of my portfolio, that it's usually, I mean, it goes down more than the gold majors, obviously, because they're seen as more risky. So when gold majors get flushed, juniors get flushed even more. And at the same time, during turnaround times, for example, the majors and producers move first because obviously they have direct relationship with the price of gold. If price goes higher tomorrow, the price of gold, they make a bit more tomorrow than they did today. So it has a direct effect to the bottom line, even though it might just last for a day. But the gold juniors, for example, is like you have to go farther out on the risk curve. And I do think that, I mean, people have been burned for such a long time, and basically a lot of people still think that we've been in a bear market since 2011, and that could, I guess, be true. So it's like, why wouldn't you kind of give up hope? And it's like, it's never going to turn around. I've had plenty of discussions where people threw in the towel last year, for example, or 6 months ago, because they thought or they felt that this time we're in a brave new world. This time crypto or whatever it is going to be eating the juniors lunch forever, and the sector is never going to turn around, which has never really happened. But again, it's like always, people buy bull markets because the longer the trend, the more evidence it is that they can go up. So they think that it's going to continue, and the longer the downtrend has been, people think it's going to continue forever, even though even the name of it is a cyclical sector, but people tend to forget that. So I do think it's been just so horrible of a sector. Plus, it's a damn hard sector. I mean, if somebody asked me, some randoms like, hey, should I get into the junior sector? It's like, probably not. I mean, it's absolutely not for everyone. And then you have, to be fair, the alternative being, for example, crypto, where in my opinion, it's like, I mean, how much due diligence is there? It's like you can't go too wrong in a sense because they don't have cash flow statements, and they're not drilling for whatever. It's like Dogecoin has, had a $70 billion market cap, even though it was created as a joke. So it's like everybody knows the game. It's like it's a pure trading sardine. Juniors can move like trading sardines, and at the end of the day, they're gonna be typically be trading sardines because they're not going to find anything material. But in the meantime, they put out a bunch of news, they dilute, they do this, they do that. There's like a endless minefield. So it's like, hey, I can understand that if you don't even want to put in the time to like figure out what 5% of juniors actually are legit investments, for example, why not go and just gamble in some Dogecoin or something? Because you can't be that wrong, because what most people are doing is just betting if it's going to go up or down. I mean, that's actually probably, your odds are better. It's like you're probably better off playing roulette in a casino than starting from scratch and trying to navigate the junior sector. I mean, it sounds horrible, I know, but again, to be fair, like this sector is certainly not for everyone, and I think that's an opinion people have formed more and more the more they've seen. And it's just going to take a long time for people to get convinced that you can make anything in the junior minors. And I think when that happens, is what happens every single time. If the bull trend is long enough, etc., and everybody's just making money easy peasy, people are going to be convinced that, oh, this is a sector that you can make a lot of money in, because I've heard stories and I've seen people make a lot of money in it. And of course, that's when they're supposed to sell. But I think it's just that the downtrend has been so long that there's so little evidence of people actually not having regrets being in this sector. And you saw that we talked about it last year especially, where it's like, look at Twitter, everybody's kind of pissing on this sector. So why should someone who's like, oh, junior minors, let's see what that's about, and they go on Twitter, it's like everybody's talking about, oh, I regret ever buying a junior, etc. When we see people, I keep saying that I regret not buying more juniors, that's when people are going to flood into this sector.
Yeah, I think we're a long way away from a euphoria phase in the gold and silver stocks, even though they have moved up, and even though the metals prices have moved up, and the margins have moved up, and the value of projects have moved up, and the amount of money being raised has moved up, and the amount of meters being drilled has moved up. Even with all that being said, there's no excitement in the sector. There's no real positive sentiment, even at conventions and when you go to conferences. Like, they're not really rocking with a fever pitch like we saw back in 2011 at a mania stage. We're not seeing commercials every 5 minutes to buy gold and silver. We're just not seeing that kind of excitement from the average generalist investor. And honestly, when you look at the SILJ chart when we were talking about it, it looks like a pattern of lower highs and then higher lows, like it's building a big wedge. We had mentioned off mic that if that wedge were to break to the upside, which it has the propensity to do, and if silver was to break out, and if the gold stocks were to start leveraging gold 3 to 1 or 4 to 1, then you'd see that kind of sentiment and excitement turn back. But let's talk about one other sector in the metals, Eric, that doesn't seem to have any excitement or depression. It doesn't seem to have any action in it, and that's the copper equities. When you look at copper, the price of copper, it made a big rally back in 2021, and the stocks responded. Made a rally in 2022, and the stocks responded. Those were on supply chain concerns. 2024, last year, same kind of thing where you saw a big rally in copper to new all-time highs in May, and the stocks responded, at least the copper producers, not so much the juniors. That's kind of what we saw in gold. The metals price goes up, the producers respond. But then this year, 2025, has been a really wacky year in the copper space. You saw copper go down on the April tariff tantrums, but you saw something like COPX, which is the big copper producers. It crashed way worse than last year, and the copper price only got down to 402. Copper prices were at 390 last year on some spikes down, and the COPX held up a lot better. So it fell a lot more. But then copper did a U-turn and shot up higher and got up to all-time highs. And it's like nobody cared. Nobody cared about the March all-time high, and then in June and July, just recently, copper screeched up close to $6 a pound. And yet the COPX and the ICOP and some of these other ETFs, they actually made lower highs than last year. And some of them barely got up to the same levels they did back in 2022 when copper was nowhere close to where it was. So they overreacted to the downside. They didn't react much to the upside. And so I was expecting when copper fell out of bed from $6 down to 430 that these things would fall out of bed. And they really didn't respond. And when you look at the juniors, some of their charts almost acted like none of this just happened. Like they shrugged off the upside and the downside. So when you look at copper stocks, especially the junior copper stocks, what's your outlook there compared to, let's say, the silver and the gold stocks?
Yeah, I think that's a perfect example again about a subsector having its own sentiment, let's say, and that it switches. So it's like you have a lot of moving parts where no subsector actually it doesn't work the same at any one point in time, and every subsector also changes how it acts basically. And that's why I find it's again so hard to predict anything. I can't predict metal prices. I can't predict how juniors are gonna react to the metal prices, and that's why I don't even try that guessing game in a sense. But it's fascinating. It's like you said, okay, copper surprised everyone. So I think a lot of people see, around this level, or I guess a bit higher than this level, kind of with gold. Copper kind of looked like gold from 2020 to 2024. Hit this, let's say $5 or whatever, and then retreated, hit it, retreated, hit it, retreated. So it kind of, okay, it's never going to break out. And I mean, just look what happened to gold miners and gold juniors when gold kept bumping up to 2000, made lower lows. It's like people believed less and less that it was going to break out. And then it broke out, and it's like, market is like a deer in the headlights that, okay, gold just went up and everybody thought that was a false breakout. I remember PDEC at the time. It's like, this isn't for real. It's probably going to peak out at 2,200 and turn down, yada, yada. It just kept going, just kept going. But it's like the gold sector refused to acknowledge the fact that gold was actually going higher because it's kind of made up its mind that this is nothing to be excited about. And I guess that's kind of what we've seen in copper lately, where, okay, copper just shot up. I think it was a new all-time high. I mean, I saw some enthusiasm about the copper price, but I didn't see that many copper units like screaming higher or anything like that. And then we have this crash in copper prices. And as far as I can tell, and what you told me, it's like, yeah, copper units didn't really move down that much. So, I mean, I would have wished, I guess, because I like volatility, especially if it opens up opportunity. So it's like, let's say copper went up after the tariffs, the copper units just shot up and started pricing in even higher prices. Well, that's an opportunity to sell because they're not cheap anymore. And now copper fell down, but maybe a bunch of copper units didn't really decrease that much in price. So it's like, I would like the copper units to crash, let's say, and price in even lower copper prices. So there's an opportunity to buy maybe some value shuffling, let's say. Now it's just that, okay, copper prices went down, but the juniors held up. And a lot of people are going to celebrate the fact that the juniors didn't go down. And, the portfolio took a big hit in their copper portion of the portfolio. But to me, as a value shuffler, a value investor, I'm like, okay, well, this is a bit disappointing because if I can have some price volatility large enough that it actually widens the price to value gap, then I can do something with it. Now I mean, if you have the same price of copper juniors today versus when copper was at all-time highs a week ago, I mean, I'd rather buy them back then, even though I'm not too keen on buying when stuff is hot. But I guess copper juniors haven't been that hot because they didn't really follow it up, kind of like gold juniors have been. And who knows when is people gonna get excited about copper units? I don't know, but it doesn't look like there's too much retail speculation in these copper units because the only real copper units I see move are typically, case by case, where there's some stock is hot, whatever. It's not broad based, and I think the same goes for most juniors. Again, I think it's some select cases that are doing well, but to your point earlier, it's like, I don't think we're even close to an euphoric top because in that case, you wouldn't see a single junior basically trade below 10 million market cap, I don't think, and you would see all of them explode. Now we've kind of gotten a taste, and some select names have had some momentum.
Yeah, it's really interesting. And I think the copper stocks did respond to the higher price, just not to the level people would expect it if it's like, hey, an all-time high, hey, another all-time high. You'd have thought that there would be a little bit of momentum building, like, well, man, I really want to pile into these. And some of the select stocks did respond, and they did pull back on the pullback in copper, but they pulled back to a 50-day moving average, and it wasn't that big of a move. I was also in some ETFs like COPX, and I was expecting, oh man, this thing probably got slaughtered. And when I went and looked, it's like, man, this thing barely moved down. I mean, it moved down a little bit, but like copper prices fell by 22%, and I think the GDX went down 3%. And you would have expected if copper prices fell 20% to see a 40% down move or 50% down move in the equities, and they barely budged to the downside. So it's not that they didn't move down, it's just not to the degree people thought. So if we summarize this, Eric, and we think about gold, silver, and copper, and all the equities, it seems like the message is that in the gold and silver and even the copper, the producers responded to the higher prices in metal, and they did track it to some degree, but they didn't really blast past it and outperform it in a major way. The juniors for gold, the juniors for silver, and the juniors for copper, it's a hit or miss thing depending on which one you're talking about. But as a group, they didn't really leverage the moves higher. And even when there was momentum in the sector, they still got hurt a lot worse on the downside to the point where the sentiment's not there and where people just don't believe it's going to happen. So if you had to talk to people now, should people even be investing in juniors? I guess is the question. And I'm asking this tongue in cheek. But why invest in juniors at all if you're making a lot better returns in the producers and if the juniors of all three, gold, silver, and copper, don't seem to react as much? Why even invest in juniors, Eric?
Right. I mean, that's the question I think a lot of people have asked themselves, and I think a lot of people came to the conclusion that they shouldn't. But I try to keep it simple. I simply buy what I think is undervalued. So whereas the producers have had, let's say, a 3-year bull market, and they've been closing the price to value gap, and they might still be kind of undervalued and all that. And if they are, I wouldn't mind holding them. But I can't say that we've seen that happen in the juniors yet. And again, I mean, there's some juniors that have done well. So they've kind of been in a bull market. Typically, it's been for good reason. Let's say they're, let's say exceptional discovery stories and all that. And they might not be that cheap anymore, undervalued. But I think there are certainly cases that still are. And again, just seeing that the fact that it's been selective, it tells me it's like, well, obviously we're not near like, oh, cyclical highs. You would expect everybody to be buying anything hand over fist. And as soon as anything with the name silver or anything with the name gold is gonna go up. So I personally think that, again, once a move starts, it feeds on itself. And that's kind of what I've been saying, that I don't know what's going to turn around the junior sector, but it's going to happen because it always happen. And of course, the cheaper they get, the more reason they have to go up, the lower liquidity, the less money is needed to form an uptrend and all that. So, I mean, I think it started, I've said this before, I think the junior bull started last year, but I think we're still in early innings basically. And I wouldn't say that the producers are probably, even though they've been in a 3-year bull market, I mean, it doesn't look like a blow off top. You don't see Newmont pricing in $4,000 gold or anything like that. I mean, we saw that in 2016. I mean, silver producers were pricing in a few dollars at least higher silver price than the price was at the time. And when that topped out, I mean, a lot of the silver producers that had gone up like 500% went down 70% because that it was that much hot money that was pricing in a future that's much better than the current picture. And right now, I don't think I don't even think the majors and the producers are pricing in a much rosier future than the present situation. And they especially don't think the juniors are pricing in that, hey, all these mines that are producing gold and silver, they're going to run out one day. So some of these juniors have to provide the next mines. But I don't think many of them are pricing in the fact that, oh, geez, every mine in operation today is actually going to run out. But we've seen that, for example, in the silver junior space. I mean, there's you know it better than me. There's been quite some takeovers recently. So I mean, the list of future projects that needs to fill the pipeline, it's kind of been going down. But I don't think the junior sector is it's pricing in that whatever the producers, they're just going to keep producing and the junior's going to be dead, forgetting the fact that all the producers, and even seen article recently that said something like, hey, the majors, they might soon need to start thinking about acquiring 200,000 ounces per year projects, gold projects. Because why? Because there's not really any 500,000 ounce projects out there. So again, it's just what's the saying by Rick Rule, bear markets are the authors of bull markets. So I think this is a, time bomb. This is a finite business and that's going to show one day.
Well, I hope it's one day soon for people listening in, and it is starting to develop in a positive way. So we don't want to throw a wet blanket over the whole sector. It's just you would have expected more torque to the upside from the juniors for gold, silver, and copper. You would have expected more of a response in valuations and economics to catch up to the metals prices, and that seems to be all still in the future if it's going to repeat all the other cycles in history, and that's why you still want to consider the junior markets. If not, you can go to Vegas and hit the roulette wheel, and you got red or black, even or odd. You got 48% odds. Maybe that's a better bet for some people that don't have the staying power or don't want to do the research to find out what are the good companies that actually will have that torque, who have the good management teams, who have the good catalyst on tap. But if you follow along with Erik, he definitely covers a lot of those companies that have the right ingredients to have those outsized moves. So we will put a link to the hedgelesshorseman.com down below so you can follow along with Erik's analysis. Erik, let's hope we see some more life in the juniors, and always appreciate you coming on the KE Report. Looking forward to our next conversation.
Yeah, the same, Chad. I think we have I mean, I expect this to be a multi-year actually bull market, but who knows? I just keep buying cheap and hoping for the best. Thank you so much.